You've probably come across SoundHound stock because everybody won't stop talking about it. You've been told SoundHound dabbles in voice recognition. In other words, they're the ears for AI algorithms. But for tenured veterans in this space, what SoundHound does isn't anything new. As longtime investors in NVIDIA, we've been researching artificial intelligence now for well over a decade. Today, we're going to talk about one of SoundHound's main competitors that enjoys a much more attractive valuation. But does that value come with future growth? Well, let's find out. Our story starts with a company we first looked at nearly a decade ago called Nuance Communications. We did this piece here. Nuance, a world leader in voice recognition back in 2016. And in that piece, the blue bars show revenue growth. So it's sort of plateaued, but it's still pretty sizable at around $2 billion. You can see they're not really profitable. But of course, this was back in 2016. So we broke out the four areas that Nuance worked in at that time. Healthcare was 50% of their venture. Mobile was their automotive solutions, which made up 20% more than enterprise. And imaging. Now, I wanted to draw attention to the automotive segment and imaging because those were divested, but this enterprise chunk remained along with healthcare, and they said enterprise plans to reduce or replace human contact center agents with conversational systems. So for a value proposition that's almost a decade old, that's pretty remarkable because that's what we're seeing with all the AI hype lately is this very same value proposition. Point being here that firms have been working on this for a very long time. So in late 2018, what Nuance did is they sold their imaging division, which OGs might remember this as optical character recognition. Really, that's reading text, pretty primitive technology. It's been around for decades. They sold that technology to Kofax for entrance into the legal marketplace. It's now called Tungsten Automation. It's a firm that's being passed around between private equity outfits. Then they spun off their automotive segment into a publicly traded company called Cerence, and that's what we're going to focus on today. Now, the following year, we wrote about Nuance again. We said that following their divestitures, they could be a great bolt-on acquisition for a larger fish in the pond that would see the potential growth of AI-driven healthcare solutions. This was in 2019, and several years later, Microsoft indeed acquired Nuance for their cloud strategy in healthcare. They had an all-cash transaction that summed almost to $20 billion. So that was a very large acquisition for Microsoft. So takeaways here, Nuance has been a pioneer in this space for somewhere around 24 years. Microsoft has now been using their technology to work on things like healthcare applications and potentially agentification for over 4 years now. Competing against Microsoft in these areas is going to be extremely tough. Nonetheless, you have loads of companies out there trying to tackle what Gartner calls enterprise conversational artificial intelligence. Now, strangely enough, Microsoft's nowhere to be found in Gartner's quadrant. I pulled it up here. You can see there's lots of names listed alongside very established tech companies like Google, IBM, and Amazon. I wanted to point to this comment made about IBM Research. This was a 2023 quadrant. So they say IBM Research added 400 speech NLP, it's natural language processing, and conversational AI patents to its roster in 2022, taking its total number of patents for this technology up to 2,700. And frankly, that means F all. We're going to touch on later and give you an example of why that is. But it all comes down to execution. A family of patents and $5 might get you a Zips medium fry with a single tartar sauce. So when we look at other firms that analyze this space, you have Forrester looking at conversational AI for customer service. We see their leaders overlap with Gartner's leaders. Strangely, Google and IBM have vanished from this analysis. And then we look at the IDC MarketScape layout for conversational AI platforms back in 2021. What's interesting here is to note how Nuance and Microsoft have fairly large circles. In other words, the size of their offerings, and those two have now merged. Now, the definitions and categorizations start to become really blurry, but one thing is certain. There's a key takeaway here, and that is that a lot of companies are dabbling in this space. Though SoundHound gets all the attention and the cheerleaders seem to dismiss all the other players that are also working on technology, whether they're new entrants or established legacy firms. So in our last piece on SoundHound, we looked at why organic growth may be slowing for this 20-year-old company and how their acquisition of Amelia, and you would see that mentioned in these various quadrants, how that acquisition doesn't inspire much confidence in the aggressive 98% revenue growth targets they expect to see this year. So the three major pillars of SoundHound's growth strategy in their latest investor deck are automotive, restaurants, and what they refer to as monetization. So is Cerence a better way to get automotive exposure? If you recall, they're a pure play automotive voice recognition firm spun out of Nuance that was acquired by Microsoft, who is a leader in this particular technology. First thing you'll note about Cerence, their revenue growth is stagnant. Why is that? Well, when you look at quarterly revenues here, you'll see that there's some trend there, but it seems to be declining in recent years aside from that single spike. And if we smooth that all out and look at the annual revenues, you see a compound annual growth rate of about 4% since 2017, since they were spun out. It isn't very impressive at all. Now, when we compare SoundHound to Cerence, this is rather interesting. Now, both firms have been around for a while. Now, Nuance started doing voice in 2001, so they had a 4-year head start. But look at how much more revenue Cerence is capturing. Remember, they're pure play voice recognition for automotive. And look at them compared to SoundHound. Which company's having the most success? Well, that's obviously Cerence. Now, even if you assumed all of SoundHound's revenues came from automotive, they're still way behind when it comes to market share. And of course, revenues are a proxy for market share. But what we do know is that for SoundHound, 90% of their revenues in 2023 came from automotive, and now that's less than 25% this year since the acquisition of Amelia. Now, over half of all auto production involves Cerence technology. That's rather remarkable. And when you look at SoundHound's deck, they talk about this big opportunity they're planning to capture. It's kind of already being captured, right? So they estimate around 4.4 million units for auto unit penetration at the top end of their estimates. But then when you look at a firm like Cerence, you see around 10 times the penetration. So this slide taken from a Cerence investor deck shows two interesting bits of information. You have IHS production, that's the units of automobiles that are produced, and then you have the variable licensing revenue that Cerence receives from the portion of those units they're able to capture, which is 52%. It's actually down in the most recent measurement. But when we look at their fiscal year 2024 results, their guidance, what they expect to achieve, that's a revenue decline of about 2%. Now, the gross margins are indeed rather impressive at 73%. Compare that to the declining gross margins of SoundHound over time. But Cerence isn't growing. And when you look at their KPIs, key performance indicators, you see this percent of worldwide auto production is rather impressive, right? 52%. It's down a bit. They talk about units shipped per quarter with their technology. You see those are down. Change in number of Cerence connected cars shipped. So they have a lot of useful KPIs that I don't see SoundHound producing, perhaps because, well, we know because they're not doing anywhere near this sort of volume. And when you think about the voice recognition market for automobiles, frankly, it just doesn't sound overly exciting. And here, this diagram taken from Cerence shows all the different applications that you have. And of course, their recent announcement with a NVIDIA collaboration, you need to take that with a grain of salt. Essentially, that means we bought a whole bunch of stuff from NVIDIA, so they gave us a press release. You read through that, and there's nothing that great about it. Is this space attractive? Is automotive voice recognition simply a commodity offering? Or is there a lot more value add that can be realized? Well, based on historical revenue growth for the leader, it doesn't seem like there's a whole lot of potential there for value add. Voice recognition in general seems to be a commodity offering that's better suited for industry verticals. That's so that you can help improve accuracy, right, of the solution. Now, SoundHound's in a difficult spot because they need to steal market share from the leader. at least in automotive. There's no blue ocean total addressable market. They've got to take that market share from companies that are already offering these solutions. Going back to that slide and all the potential applications for voice recognition in automotive, there's certainly a cap there on usefulness. The value add is going to depend on the industry. So you think about in healthcare, Microsoft identified that as a space they wanted to get into, and transcribing a patient's symptoms and handling all the security behind that's going to have a lot more value add to it than asking your car to turn on the AC. So the other question we'd have is this automotive voice recognition technology going to become less useful with the arrival of autonomous driving? Need to think about that. Cheerleaders don't talk about that much. They'd rather just pump the stock. And as you can see here, we've calculated simple valuation ratio. That's market cap divided by annualized revenues. We've calculated that for Cerence and SoundHound. For SoundHound, you see the chart here shows how in the past year, shares have increased 660%. Now, intrinsic value doesn't get created this quickly. This is hype. Two things will happen here. Either the valuation is going to revert back to the mean, or the fundamentals are going to catch up, and that's the 98% revenue growth they're promising for this year. As you can see in both these charts, you have Cerence on the right. Their one-year return is much less impressive, minus 32%. Another way to put this is that Cerence is 1/10 the size of SoundHound with twice the revenues. At our catalog average in SVR of 6, SoundHound would trade at $1.52 a share, and if you gave them a premium for their expected growth, our maximum acceptable valuation of an SVR of 18, they would trade at around $4.60 a share. So SoundHound is clearly overhyped. Well, Cerence would be below our catalog average. Why is that? Because they're not growing very fast at all. They're expecting negative growth this year. So getting back to SoundHound, because that's the stock everybody wants to talk about, automotive isn't a compelling reason to invest in SoundHound for the reasons that we've shown you today. There's already a leader out there that's enjoying 10 times the unit volume. Just invest in them if that's what you're looking for, if you wanted that exposure. Now, with the acquisition of Amelia, of course, SoundHound has diversified their revenue streams, which is good to see. They've entered into new verticals, which include finance, insurance, and healthcare. That's a problem because you don't really want to be in the healthcare voice recognition segment when you have Microsoft as the apparent leader in that space. Now, what about the other strategic pillar for SoundHound? That would be restaurants. Well, interesting commentary here last summer about McDonald's ending their drive-through AI test. Remember we talked about how IBM had this great portfolio of patents? Well, those didn't work out too well for their McDonald's efforts, as McDonald's and IBM have parted ways. The fast food giant had first gotten into voice recognition in their drive-thrus back in 2019 when they bought this firm. They renamed it to McDonald's Tech Labs. They sold it to IBM 2 years later, and then they bailed on it 3 years later. Now, there are other fast food companies out there like Checkers, Hardee's, Carl's Jr., Wendy's that are working on technology for drive-ins that can potentially save labor. Now, the ability to understand voices is a commodity offering, as we said, but for fast food chains, the best way to train your algos would be to start recording audio at a disparate number of locations so that it starts recognizing all your various food items on the menu, and it knows how many different ways people can pronounce them. You can then throw a human in the loop if need be. There was actually a firm out there that said they were doing this, but when they looked, they just had a bunch of people in Manila doing it. That's an option, I suppose, as well, right? So if you do some back-of-the-napkin math here, there's actually quite a bit of value to add. If you assume 24 hours a day, you need to transcribe orders at $25 an hour across 13,000 locations that McDonald's has in the United States. That's a $2.85 billion opportunity. Now, how much growth has SoundHound seen from this niche? We know that this technology's been around for a while because McDonald's been using it. When 90% of their revenues in 2023 came from automotive, doesn't seem like very much is coming from restaurants, and it's all part of this master plan that they have. Well, they've been around 2 decades. We'd expect to see a whole lot more progress than they've made in the various verticals that they're addressing. And it really all comes down to revenue growth. SoundHound's forecasting 98% growth this year. Let's see if that happens. Now, if you want to better understand some of the various problems with SoundHound stock that we've uncovered, this is the presentation that you're going to want to watch next. Thank you so much for taking the time to watch this today.